I hope everybody is enjoying the fall. Today is October 29th, and we did have a Bank of Canada announcement. Bank of Canada chose to cut interest rates today from 4.7 down to 4.45% on your mortgage, or their overnight rate from 2.5 down to 2.25%. This is good news. If you have a variable rate mortgage, that means that your payment will either be slightly less, or the amount of interest that you are going to be paying with every single payment is less as well. So good news. If you have a fixed rate mortgage, unfortunately, this information does not impact your mortgage, but you could see, based on this announcement, ramifications for the rate market moving forward. Let's just talk a little bit about the economy at the moment. As everybody knows, we have been in a prolonged trade war now with the United States that kicked off at the beginning of this year. President Donald Trump has shifted the way that the world will interact and trade with the United States moving forward through the tariffs that he has placed globally on many different countries. Unfortunately, Canada is still in a position where our situation has not improved since the beginning of this trade war. We are now in a position where we have additional tariffs that we are facing, and there is currently no end in sight. This is important because it has very negatively impacted the Canadian economy. Our major sectors like the auto sector, the forestry sector have been hit hard, and we are starting to see unemployment rise. This is important because what it means is that we're likely to see further cuts from the Bank of Canada as we get into the end of the year. The next meeting is going to be on December 10th, and the expectation at this point in time is that they probably will cut again, even though the Bank of Canada said today that this is potentially the end of their cutting cycle. I don't quite buy it. However, there is one very important piece that is looming that we're about to find out inside of the next week. The Liberals are supposed to finally table their budget here on November 6th. The budget is supposed to be quite large and have a massive deficit that is associated with it. And the budget is important because it could have several different ramifications for not only the rate marketplace, but the Canadian economy moving forward. As it stands at the moment, the expectation and from the news is that the Liberals don't actually have the votes to pass this budget inside of the House. And if that doesn't happen, we are going to be back to the polls likely quite shortly, which isn't necessarily a great thing either. We'll have to see how that budget comes out and how it is interpreted by the markets moving forward. If there is a lot of support for industry inside of that budget that is meaningful, it could be a good thing for Canada. However, if there is a lot of bureaucracy inside of that budget that is not really going to move the needle, it could be impacted negatively or interpreted negatively, and will have ramifications for our fixed rate bond market that is controlled by the market as a whole. So just watch what comes out here in the next week or so. As far as that Liberal budget, we'll have to see how that plays out. We do have to kind of see what happens with the trade situation, but we've been waiting for months and months and months now for some kind of development with trade in the United States, and it just seems like it is not coming. We do have the renegotiation of USMCA and CUSMA that is coming up next year as well. I don't know if we're going to get that agreement renewed as it stands. Certainly doesn't look that way. That does protect 85% of all of the goods and services in Canada that currently are traded with the US and Mexico. But from the expectations that are looming out there in regards to that negotiation, it looks like Trump is going to either get rid of that agreement or renegotiate it in such a fashion that it would be not as great for Canada. So we'll have to see how it all plays out. But overall, the expectations for interest rates through the end of 2025 and into 2026 is that they're going to be slightly trending lower. If you have a mortgage renewal that is coming up at the end of 2025, 2026, I do expect that, again, interest rates stable or slightly lower, which is good news for majority of Canadians. We are expecting rates to kind of land somewhere in the 3.5% to 4% range on the fixed side. And one of the important distinctions based on the rate cut to prime today is that variable rate mortgages are now actually lower than fixed rate mortgages for new mortgage adopters, just because over the last couple of years, the variable rate mortgage, even if you took a variable rate mortgage, the pricing was going to be higher than what you would be paying in, let's say, a 3-year fixed rate. This is an important distinction because it now has shifted us back to what the norm is, where variables usually start lower than the fixed. And then, of course, there is risk associated with them. A lot of people ask me, Tyler, should I take a fixed rate mortgage? Should I take a variable rate mortgage? And really what we're doing when we're choosing mortgage products at this point in time is that we are managing our risk tolerance. So if you have a variable rate mortgage, and you are starting to get nervous, certainly you can always look to lock that in. However, I do expect further downside for those interest rates. If you have any questions about the housing market, let's just quickly talk about that, because we have had a lot of our clients reach out to us and say, hey, Tyler, what is going on? What can I expect? So housing market is muted at the moment across Canada. There are certain segments like the condo sectors in BC and Ontario specifically that are not performing well. There's way too much inventory, just not enough buyers, and there's not a lot of confidence inside of the market for purchasers at the moment. However, when we take a look at the overall market, there are still lots of people that are transacting in this market, and can be some good opportunity for individuals that are looking to move up the property ladder. So people do still have to transact in this market. People have growing families. There are people that are choosing to downsize. And what you can find is that you can potentially get a much more expensive asset at a discounted price given the amount of inventory that is on the market. So if you are starting to feel a little bit stuck inside of your existing place, maybe you're outgrowing it, now could be a good time to start to take a look at what your options are to move up the property ladder. If you have the ability to do so, we're happy to help you do that. I appreciate all the support, and if you have any questions, please feel free to reach out to us here at Pilot. We'd love to help you. I will see you on December 10th for the next Bank of Canada update.